Please welcome Neil.
I was worried you wouldn't be able to read some of the words on the slides in this one, but never mind. So last time I was in here, it was very surreal. I was sat where Stu is, watching Home Alone and drinking mulled wine. So to be stood here kind of 4 or 5 years later is very odd. I tend to walk around a lot. It's probably because you can't hit a moving target. And I guess if I think of what I'm going to talk about now, there's some real good synergies around values and trust from what we've been talking about there. And I've come from insurance, so that was the bottom rung in terms of trust in financial services, certainly in the UK. I've moved up a step to banking, so I guess the next step will probably be estate agency or something like that. How many people have heard of Atom Bank? Can you put your hands up if you have? So of all the conference circuits that I kind of do, the brand itself is built on PR and social. We've been building the brand now for 2 years, so we started trading just over 2 years ago. We've now got half the brand awareness of First Direct, who I'm sure if I asked the same question, everybody would put their hand up. And we've done it on about £400,000 spend over 2 years. First Direct spend 15 million quid a year on marketing. So I'm going to talk to you about how we've gone about that. The first and foremost piece that we stood behind when we started to build the bank was to really stand for something and make sure that permeates itself all the way through the values in your organisation and importantly the culture. The reason we exist is we want to change banking for good. The key word here was change and good, or key words. Change when you're in a sector where the big four have been dominating for so long, but the last financial crash, which is now 10 years ago, believe it or not, unlocked the door for a lot of new digital and challenger banks to come into the market where they didn't have to have as much capital to get going. And change banking for the good. So there are all sorts of different levels of trust, which I'm going to talk to you about. If you said, do you trust your bank? Most people would actually say yes. If they said, do you trust banking? Everyone would say no. So I'm not going to preach about us as a bank, but I'm going to talk to you about just a few pointers. So we're heavily invested by BBVA, which is a big Spanish bank. We got our license 2.5 years ago, very quickly got onto Android and Apple. We were named the sixth, It was the sixth most innovative fintech on the planet by KPMG. We've been in the top 10 for the last 3 years. We launched residential mortgages all through an app, December 2016. Our current record is somebody walking into a broker, being recommended a product, downloading the app, and us offering them a mortgage in 14 seconds. The average in the market is 10 weeks at the moment. We've done it in 14 seconds. Very, very surreal moment in time. Will.i.am came on as a strategic board advisor. I'm not going to talk about that kind of stuff, but you can grab me during lunch if you really want to get stuck into that. Raised 150 million earlier on this year, and actually there we've got it down to 12 seconds, the mortgage application. In 2 years, we've got 1.6 billion in savings, which come, if you think of a seesaw bank, 1.6 billion in savings on one side, and then we lend it out in mortgages on the other side. So how have we gone about and done this? So this is, I don't know if anybody's seen this, but this is Bane's model for value hierarchy. If you're going to take any photos of my presentation, this is the one to do. And we started at the very bottom. So in terms of value and trust, every business, whatever sector you're in, whether you're financial services, whether you're retail, whatever it might be, it all starts with functional at the bottom there. So if you're not delivering any of those elements there, as you move up the hierarchy of this pyramid, which I'll talk through, you've got no chance. We looked through this, and as much as it pains me to say a consultant slide that was a triangle became the kind of North Star for us, it has been. And we went through some of these bottom ones here and said, okay, functionally, what do we want to deliver? Saves time. Right, how do you make sure that you can go in, download the app, and have an account open in sub 10 minutes? That was the ambition, and we delivered that. Make money. So an obvious one here. So do you go hard on price? Our view was in the early days, yes, we went 40 basis points ahead of the market, which was unparalleled. It got us loads of noise. Martin Lewis started talking about us, and we were off. Reduces effort. So in the mortgage journey, for example, we don't have any paper in that process whatsoever. You can imagine when you go into brokers and you have all those reams and reams of papers that you've got to sign through. It's just a couple of clicks of the app. And we've got all sorts of various calls going out to credit agencies, things like that, to make sure that we're comfortable you're the right person. Quality. So a fairly obvious one. If you look at our website, if you look at our App Store rating, you'll see it kind of fluctuates between 3 and 4. We know exactly why that is. We have a lot of people in our own sector putting poor ratings on there, believe it or not. We think it's scandalous. But also we polarize opinion, and I'll come on and talk to you why I think it's important as a brand you should be polarizing opinion. If you're delivering a selection of those, you can arguably start to move up the value chain. You certainly don't need to be, or the value triangle, you certainly don't need to be delivering all of those. You then get into kind of the emotional territory. There's a brand that I love at the moment called Thriver, which is a subscription-based health app, if you like. And they send you out a way to collect blood, and then you send it off to them, and it gives you a huge amount of detail about your kind of health and wellness, more so than your own doctor can give you. So I was in my doctor's a couple of days ago to do an annual blood test and all that lovely stuff, and actually I showed them what was in this app, and the doctor said, well, there's kind of no point you coming back to us, that's delivering you more value. So you're straight into that kind of wellness territory. Design and aesthetics. So the app was built so quickly that some of the design and aesthetics within it we're not very proud of right now. But we made that call to go really, really fast, deliver it agile, and get it out into the market. So we're now starting to fix the design. And then as you move right the way up to the very top, arguably there is an absolute handful of brands that can get right up there. I'll talk about one in particular I think is probably into the kind of second or third tier. When you then start to benchmark your brand against others, it's important that you look beyond your competitor set. So these are the kind of guys that we were looking at. You know, the bingo card examples, when you rock up to any conference, you hear all these. But again, these guys polarize opinion. Uber, for example, you know, they've delivered all that functionality at the bottom. They're into that kind of emotional territory. But you look at how they treat their staff, and I don't think that has really had a material dent on the usage, certainly down kind of metropolitan areas. Spotify is the example that I would take. So we were speaking to a VC firm in the States around how do you identify future unicorns, so those businesses who are going to be worth $1 billion in kind of 2 or 3 years. And they talked us through a hierarchy of this, which again I still think can be translated into any brand. And the first level that they talk about there is what is that hook where you're going to get somebody in to just have a little test and play about with your product. So if you think about Spotify, way back in the day there was a free version, they didn't even do the paid version back there, and it was getting fueled by adverts. So you're kind of getting people involved in a core action and coming back and starting to talk about it. Then when you get up to level 2, the product is getting better the more that you interact with it. So for those who use Spotify, and I'm absolutely obsessed with it personally, you get into the realms of Discover Weekly and Release Radar. So whatever comes out on Monday, which is all tailored to your listening habits. So it's looking back and giving you songs and samples to play with, and then it's looking forward in terms of those albums that are getting released. And it locks you into a circle there where the data is such good quality that I personally wouldn't then go out and look beyond and see what Apple have got to, because I know that if I leave that brand, there's a disproportionate value drop to go and build up that kind of data pool again that gives you so much value. This is a very quick canter through our sign-on process. So The biometrics itself, it is bloody quick, isn't it? The biometrics itself, so the most important thing for us as a new bank was getting the security in place. We developed our biometrics model way before Apple implemented it into their phone. When Apple came out and implemented biometrics in there was a big sigh internally at the bank. We're thinking, bloody hell, what happens here? But we then started to talk through the legal ramifications of this going forward. Apple actually came to us and said, we want to stop you to stop using your biometrics and make sure people go through theirs. And we haven't, taken legal action on them. But if you think about trust in a bank and an entity, would you rather have the phone itself being the login, or the bank using your biometric data for its login? And we've been wrestling with that. And actually, we now know that from a legal perspective, if anything went wrong, the biometrics that are with Apple can't be touched legally. So owning the biometrics with us, we can then play that story back into the market in terms of security and trust. How are we doing for time? I'll skip through that. I think also as you start to build a brand, so it's really important that you don't actually have to put an ROI on everything that you do. Blessed with working with a CEO who's an ex-marketer who will trust you as a marketer to make decisions that are right for the business. And you don't have to go back and report every week and say, this is what I've delivered and the return I've delivered. One of the quirks within the app is all about personalization. So again, kind of going back to that triangle that we shared earlier, we've got a personalized mark or logo that you decide once you go into the bank which palette you have. We then take that palette away so that nobody else can use it, and we've actually got enough variations for every single smartphone on the planet. And then again, if you're working with a brand, again, don't feel like you have to deliver ROI on everything. So when all our first mortgage customers came through, I went to Mark Mullin, who's our CEO, and said, wouldn't it be great if we did something quirky and just said, as they get the keys to their first home, so we can identify that they're a new mortgage holder, why don't we send them this along, which is a tile which you attach to your keys so that nobody will lose them. It costs us probably about £50,000, £75,000, but for us it just felt good. It was the right thing to do. We didn't ask anybody to post it on social or hashtag it or anything like that. But we found a huge amount of customers actually did that on our behalf.
I don't believe in fitting in.
Just going to pause that one. So culture is probably the most important thing for us within a bank. The technologies that we've got that are out there, you can go out and kind of buy those off a shelf if you really wanted to. We're firmly based in the northeast of England. Finding kind of front-end devs who can use React and all that kind of stuff is really, really tough up there. And what we want to do is try and lure those types of skills or keep them in the region when they come out of the universities. This is a 40-second video that we produced as we started looking at our brand repositioning to get the people that work within the business to really understand what it is we're trying to achieve.
I don't believe in fitting in.
I don't believe in fitting in.
I don't believe in fitting in.
I believe it's about doing the right thing for me.
For me.
And me.
And me.
I believe in making things fairer.
I believe in honesty and plain speaking.
I believe.
I believe.
I believe I should be at the heart of the business I'm dealing with.
I believe the technology
should help me make better decisions.
I believe I should be in control of my money.
I believe banks should help and support me.
Atom Bank for me.
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 and me.
I believe that other banks are just Goliaths.
Say hello to David.
Ironically, we couldn't find anywhere in the northeast to film that, so that's in Shoreditch. And then just to wrap up then, so we use Trustpilot a lot. It's really important for us to be going out there and reinforcing trust. We've got 5-star Trustpilot rating now. We're the first UK bank to get 5-star Trustpilot rating. First Direct has got 2.5, I think. And it's imperative, I think, that you start to have conversations with the likes of Trustpilot if you've got people rating your business out there. Going back to the App Store rating, where we can't control what people are saying on there, with Trustpilot, you can get an element of control where you're going out to your existing customer base. So once we got to 5-star, we made a huge deal about it. And you were talking about the metrics that go through into your websites. We saw an absolute uptick once we started promoting this in the social channels. So that's the byproduct of all that triangle of trust, if you like. There we go.
Fantastic. Thanks very much, Neil. I want to very quickly jump back a couple of slides just to check that I understood something. And it's a little bit of a challenge, I think. I hope you'll forgive me.
How far are we going back?
You had you said that trust was central, and you were talking about the biometric sign-in.
Yeah.
And you basically said there was a choice between switching from your proprietary biometric sign-in to piggybacking on Apple's, basically. And I think, if I understood it rightly, you said there's a legal reason why you went with your own solution and not Apple's. But from a consumer trust perspective, are you really saying that an owner of an Apple phone and probably 6 other Apple devices who knows that transaction is being processed in the secure enclave, not in a third-party system somewhere, would place their trust in a challenger bank, a new emerging organisation, over Apple? Because that seems to be at the heart of...
Yeah, we did some research just up the road, actually, in Leeds, where we tested this. Without asking the people or telling the people in the room who we were initially, that we were a kind of digital challenger bank, we put a load of brands out there, the big kind of behemoths from a data perspective. So Apple, Google, Facebook were in there, and talked to them around what proposition we were bringing to market. And then put these brands out there, and they were all digital adopters across a range of demographics, and said, would you want the ownership of the biometrics with these types of brands, or would you want it locked in with the bank? And you might have 2 stages to get into our bank. Categorically, every single one said those guys have got far too much data of mine already. So that convinced us that we continue down the track that we are going with biometrics. Interestingly, over the last couple of years, and I think this is a sea change in kind of digital behaviour, the most tried method to get into our app is now voice, way above passcode, which we thought was really interesting.
That is really interesting. And that kind of brings me on to my next thing as well. Where is this going next? Because the challenger banks aren't really challenger banks anymore. It's a bit like emerging markets. They've kind of emerged. They're pretty established now. I bank with Monzo and Tide. We know all of these things now. We know they're trustworthy. If you were starting up now as a disruptor in the space, what's the thing that you know you would have to get right? Or what's the thing that would disrupt you, the Atom Bank, now? Where are you weak?
What would disrupt us? I think the reason we've gone down, so you talked about Monzo there. So Monzo, Starling, Tandem are the kind of banks that we get compared against. We deliberately went off down the track of savings and mortgages. So the key thing we think is you have to pay your investors back first and foremost. You'll look at Monzo, you'll look at, I'll take Monzo in particular, you talk about 1 million users. Now, getting those people to convert to current account, they're really, really struggling with. So that people are using them as a service as opposed to moving their current account with them. And it's a bloody hard market to crack in terms of getting people to come across. You see all the big TV advertising with incentives of £100 to join, and we'll give £100 to your friend and all that kind of stuff. So we think we've gone down the right route, savings and mortgages before current account. Who's going to disrupt us? I think it would be really interesting to see where kind of personal AI goes. So the comment around the Google piece, we're actually, one of the reasons we got will.i.am in, his tech business also has contextual AI being built. So rather than Google search where It'll search the market, but then if you then search for something else, it can't contextualize it back on the web. They're obviously trying to build that with voice. Where you go in a fully voice-enabled future and who's going to disrupt there, I think is going to be really interesting to see, particularly when you're in your home environment and brands are disaggregated from the Google Home or the Amazon hubs.
Yeah. Okay. So personalized banking that's maybe a service that's agent-driven, that's an algorithm. Yeah.
Just don't let it laugh.
If I can just jump in there.
Please.
I mean, one comment maybe from my perspective is that perhaps people who are going to disrupt in the future are going to be the new wave of challenger banks, are going to be those who can acquire customers the cheapest. Because my understanding is the customer acquisition is the problem, because that is costly, and I think it's in the region of £70 per customer to actually acquire a new customer, and obviously that is quite a huge expense when, you know, if you scale that over time, considering that banks are probably not making much money from that customer if they're just running a current account. So I think that maybe one challenge for the challengers is that they need to acquire customers at a lower cost and drive that right down, and that is where the new technologies can help.
It's really interesting that debate has moved on, and it's not about bricks versus clicks anymore, and having physical premises and face-to-face relationships. It's about cost of acquisition, which is the same old business story.
I'll just finish with this. Our oldest customer, so has gone through the biometrics process, is 99. So that completely busts the myth of kind of digital adoption. So one of the reasons we're in the northeast is to keep costs low, so you can keep those acquisition costs down.
Yeah. Just to finish, a quick show of hands. Whose primary current account is digital only or challenger bank? 7, 8 people?
That's the challenge.
Okay. Interesting. A round of applause for Neil, please. Thank you.